This is Gino live, and we are on. Had a few trades this morning. Not a huge list today. That makes life easy. We do have some economic data come out I want to go over. But we're going to do the fast five picks. This is what the screener brought up. The red ones are bearish setups. Not that many. And VGK, Schwab, all these other ones down here. Possible bull setups. Let me know if there's any you like. Those are ones we might drill into. And then add to the list later when we go into the lightning round, or whatever to call it, the fast five picks or your picks. They got ABC stores out here now. It's like the Walgreens of, not even Walgreens, they have it in Vegas too. Oh, Big Papa says the VXX. So if you buy the VXX, we'll go into that. You can buy the shares of the VIX. You're buying the shares of an index. That's like saying, hey, I want to buy 100 shares of the MACD. I want to buy 100 shares of the Stochastics. I want to buy 100 shares of the Bollinger. It's not a company, but you can actually buy shares. And then it has options. And that's how popular the VIX is. Now the VIX, VIX, you cannot buy shares, but it has options. But the VXX and UVXY, and it's really volatile for the price. Like it's $20, but it's volatile. And that's why we look at it, because it's more volatile than the market. So it's easier to catch it making moves. Sell slightly in the money covered call, 1 or 2 strikes every Thursday, and just keep rolling it no matter where it is. Every Wednesday or Thursday, back into the money. It's a weekly covered call. It's amazing how it protects your downside and it gives you cash flow. But once it gets under like $17, $18, get out, let it do a reverse split and do it again. That's the whole system. Just saved you $3,000 in a hotel room visit right there and some parking and bad coffee. Okay. SpaceX is now, 3 weeks in? And I just want to keep focusing on this because it's the most heavily watched rocket launch. The most heavily watched IPO. And the reason is I want you to always remember what an IPO does. An IPO, very popular, shoots out of the gate. It opened here at 150. The insiders years ago bought it for $2 a share, got gifted free from their friends and family. It's selling off. Why? Because people take profit. Those that can. Now, there's a lockout period of usually 6 or 9 months, or both, or 12 months, where the insiders who bought it $2 haven't even started selling yet. So they're watching this going, oh God, please hold, So just remember this. Most IPOs are less than their initial offering, the day one. The most IPOs after 6 months. Most of them before 3 months. So yeah, it was a record setting, but boom. And this is one of the reasons why, just one of many, why they usually wait to list it. Why do they wait to list a company? Because to get into the NASDAQ, usually it takes a good year minimum, but you have to hit certain requirements. For example, if you want to go list a company, you can't be trading at 50 cents a share. You got to be $3 for at least 6 months or a year. You got to be $5 at least sometime. You got to have a certain market cap, all these other things. Did they list it too early? What if this gets down to like $5 a share? They have to delist it. That would be hilarious. Will that happen? I don't know. Possible. But keep your eye on it. What's interesting is this line right here. What's this? That is the 10-day moving average. It kicked in right after 10 days. So see right here, the average price after 10 days is right here. So it's trading below the average price in the first 10 days. 1, 2, 3, 4 days, only 4 did it get greater than the average price. What's this line here? 20 days. So this is your 2-week moving average. This is your 1 month. And this started 20 days is 1 month in the stock market. That's its average price. So if you think about it, the average price is now going which way? Down. And it's interesting if you're brand new to see how these moving average are doing what? Following the price. If the price goes sideways, guess what's going to happen? This is going to catch up. And if it's going sideways, the 20 days is going to catch up and it's going to follow it. What's the next moving average to kick in? The 50, you know, and if I go and put my 50 on here, watch, I put my 200 and I'll put my 50. It's not on there yet. We haven't had that many days. But isn't it cool to say, okay, there's the 10th day of trading, or actually 11th. Here's the 20th or 21st right there, right? And we are new lows. So now the question for you guys is, especially brand new people, do you buy it here? It's a green doji. You buy it here, yes or no? We actually did a trigger right here before the moving average was formed and did not work out. Because there's no support levels with moving averages. Where's the support level here? Does anybody know? On a new low, it already broke the triple bottom, right? Bearish triangle. So where do you buy it? Don't guess. Even on the wheel class, guys, don't sell puts on this until you really feel like you want to own it. You see that red line right there? Make sure it's above that. That'll put the odds in your favor above the 10. That'll put your odds in the favor. Then wait for a doji, and then a continuation cycle above the doji. So that's the whole system. Now, where's the MACD? Where's the MACD? Well, the MACD needs 12 days and 26 first, then it divides it by 9. So we're going to get close to that MACD starting here pretty soon. Is that going to be fun or what? That's going to be exciting. ACLS, you like ACLS? I do too. Why? Because isn't that an aggressive sell-off bounce? That's definitely wave 1, 2. 3 is usually bigger. Could you throw the Fibonacci on here and say, okay, is this bounce over? Now, when I do this, guys, watch, and I saw this before I even put it on there because I'm good at this. I do this a lot. You see that 61.8 right there? That's a major level. And what happened here? Okay, that's good. I want to get rid of this. I want none. I want no color. Okay, so on the Fibonacci, you get a trend, right? You get a trend. And it's pretty easy. Take the high of the trend and the low of the trend. That's a sell-off. See that wave? Let me zoom in here. So you could put the 0 here and the 100 here or vice versa. I like to be, because what's the difference between this and this? 38.2%. What's the difference between this and this? 38.2%, right? So this is either going to be 38.2 or it's going to be 61.8. They're the same distance. This is the retracement line. I like just to remember 61.8 because here's 0. Here's the length of the trend. It retraced right dead on the 61.8. Does everybody see that? The trigger right here, what was the support here? The 78. If that triggers right here, I might add to my position because the target, there's 2 targets. I got a few targets in here. The target, ready for this? What's this line right here? What do you think it is? That's the target, right? Watch. Now I'm going to edit this. I'm going to put a few targets in here that I like. I like 127. You can also put this one. There's a whole bunch in here. And I like to do like, oops, hang on a second. 113. See 113? So here's 113. Here's 127. By the time this thing goes like this and breaks down, guess what? It'll be in here. But that's what I'm looking at. That's what I'm looking at. This area, there'll be the breakdown trigger, and we'll do something like this. So there you go. That is a nice retracement right there. It's a little off the 20, but that's perfect. That's deep. Looking at next, what do you have? So that retracement's perfect. That's a perfect wave 2. Nice risk reward right here. It's just, will it hit target 2? I don't know. And DLB, where's the target? Where's the target on this one? And this is what Fibonacci is good for. You pick the top of the trend. Isn't it right here? Isn't that the trend right here? And you go, okay. Let me just try to zoom in here. I'm going to move this out of the way. You could use that, or I'm just going to use that right here, roughly. And it gives you targets to the downside. So based on the trend you pick, it gives you targets to the downside. And the best way to say where does the trend start is where did the 10 and 20 cross? You see it right there? See, it was going up and see it crossed right there. So that's the last high pivot. And there you go. Down here. Let me move my... So these are your... So it gives you targets to the downside. It's a forward-looking indicator. Who would like to learn more about using the Fibonacci? We had UnitedHealth. UnitedHealth is an elite beater. Highly predictable, big beats. Right? 91% reliable. But what happened today? If they miss, look at, this is usually what happens. This is what happened. So if they miss, do you want to be in that stock? If they miss. They're down 17% of the time if they miss. Is that a good warning right there? Pretty interesting, right? And you could go look at these companies, and when they beat, they're not up that much. So United Healthcare, let me go in here. Beat by how much? 31%. And they're up, thank God. Because if they were missed, what would happen? Because if you go to the data and look at it when they miss, not good. How about, so that would help me right there. Like me personally, you better pray they don't miss. So what do? You better buy a put. Because do you want this thing to gap over your stop loss? No, right? If you were selling a put, look how far out of the money you have to be. Does that make sense? And that's it, guys. That's all I have. So the final list, final 4 right there are presented to you. Less than, greater than, greater than. Oh, let me see. Where'd they go? We got ACLS right there. NXT right here. Dolby right there. And Core. Core is the only bullish player right there. There they are. 1 bull, 3 bears. There's not a lot of setups.